over the weekend I saw this article posted on each property. Okay, this article is actually mentioned about MCST selling penthouse at a particular development for $1.18 million. Okay, and the reason why they are selling this house is because under the section 43 of the Building Maintenance of the Strata Management Act, okay, this can happen when an owner has repeatedly failed to pay the conservancy and sinking fund charges. Okay, this is something quite new that I just found out, that under section 43, MCST actually have this power, okay, to sell one of the owner's property, okay, should he fail to pay any of the charges. In the previous clip, I actually shared on the article that the MCST has the ability or power to force sell a property, a unit, if the owner failed to pay off any conservancy charges or sinking fund. Something we can relate to what I'm going to share with you right now is a question that a lot of clients like to ask me, is whether should they get a mortgage insurance to cover their mortgage loan or for their property. Before I move on to that, let me share with you why is there a need for mortgage insurance. To make it simple, mortgage insurance, like I mentioned earlier on, is actually used, okay, to protect against your mortgage loan with the bank. If today you are a HDB owner, most likely you will have this coverage under the Home Protection Scheme. It's actually a similar coverage, okay, to the mortgage insurance. The only difference is that HPS is only applicable to HDB owner using their CPF to pay for their mortgage, okay, under HDB loan or bank loan. However, if today you are a private property owner, you won't have this luxury of a home protection scheme by CPF, which is why there is a need for you to get your own mortgage insurance. And now why is there a need to get a mortgage insurance? It's very simple. It's to protect your property against the bank, okay, which you currently have the loan with. For a mortgage insurance or HPS, okay, what this does is that when a person, a borrower, pass away or have a disability or terminal illness, this coverage, okay, will pay out one lump sum to you, to your beneficiary, and they can use this to pay off the mortgage loan. But however, something different between the HPS and the private mortgage insurance is that for HPS, upon a claim payout, firstly, CPF will use the lump sum to pay off any outstanding you have on your HDB flats. Okay, and the remaining, supposedly if it's a disability or a terminal illness, the remaining will be credited to the borrower's CPF OA account. Under HPS, if a person passes away, similarly, they will use it to clear up the outstanding loan you have with the HDB, and the rest they will credit back to the CPF OA of the borrower account. And as for a private mortgage insurance, something different is that today the payout, they will pay it to the beneficiary, okay, the nominees that you have set for in your insurance. And why is it so important to get a mortgage insurance for a private property owner? Supposedly right now you still have outstanding loan on your property. Is that if the property that you're having is for own stay for your family with kids, ultimately if anything were to happen to you as a borrower, you will want your family to have a roof to stay, rather than they have to still worry about how to pay off the mortgage loan for the future, which is why the importance of mortgage insurance come in. That's all for my sharing for today, and hope to see you in my next video. Bye bye.